it now is relevant for us to say that the price of Bitcoin is up $742.39 as of up now 682.71 because it's
Crypto.
moving around. It's 46,505 and 36 cents for one Bitcoin, and the reason why this is relevant today is that late yesterday, the United States Securities and Exchange Commission voted to allow ETFs to hold Bitcoin and be sold to the public. So this is a seismic development here when it comes to cryptocurrency and the ability for the public to access it easily. And by access, I basically mean access the price of it, not the actual cryptocurrency. And to talk about what this means, first let's talk about how this works, because I think it's important. So there have been products to this point that have held Bitcoin futures, which are derivatives that are tied to the price of Bitcoin. But up until now, the SEC has said, you can't be an exchange-traded fund that just holds Bitcoin. We won't allow it. And there was a court ruling last August that cast that into question. And the SEC, after that period, has moved forward now and said, you know what? We're going to go forward with this, and so we're now going to allow ETFs to, as their assets that they hold, directly own Bitcoins within them. Your thoughts, Michael?
The SEC
Or would you like me to go first?
The SEC didn't want to do this, and they were kind of pushed into it by courts. They lost a lawsuit against a big fund manager that basically said, look, you can have concerns about fraud in the Bitcoin and cryptocurrency industry, but those concerns aren't enough to justify completely shutting out an entire asset category. And so I think they were kind of pushed into this corner. In terms of what it does, as you pointed out, I think it, whether that's justified or not, lends credibility to the crypto space and Bitcoin especially. Might cheapen it for its overall, original use case, but I don't think most crypto investors care about that today. And widens the potential Bitcoin investors substantially. Whether or not that, we'll see whether that results in significant price moves upwards. But you have to say that, the fact that the average American investor can now easily put this into their IRA substantially increases the potential list of investors.
So, here's my take on this, is that the actual promise of Bitcoin as a decentralized network that can be used to transmit information and money and blah, 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 and yada, yada.
Dead.
Yesterday is the day it died.
Yeah, it's dead.
Because now, all it's going to be, and I will. It is bad that all it is going to be now is another asset that can be traded in the Wall Street casino. Because there are far more people that are willing and able and knowledgeable about how to buy something in a basic investment portfolio, as opposed to all the stuff you got to do right now with crypto, where it's like, I got to have this wallet for this, and I got to interface with that protocol, and blah 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 blah. Like, that's a lot for people. Like, you take a trip to the DMV, and that's hard.
Yeah.
Try not losing your crypto.
Yeah. The average retiree is just not going to do it.
So this becomes just something that is going to be talked about by investment managers as, and I don't really know that it is, but like it's going to be a, quote, asset class.
Mm-hmm.
Now, I don't really know what that asset class means, because you've heard a number of different things. Like, the first one was that Bitcoin was an inflation hedge. But last I checked, Bitcoin had a pretty terrible 2022 when inflation was roaring.
Yeah.
The other things that you hear is, Bitcoin is, it's a store of value. Not really. It goes up and down an awful lot pretty quickly. Oh, well, it's so you can buy stuff with it. Well, no, a lot of companies that, initially did that have kind of backed off of that because they
Remember
said
Tesla?
Tesla said, no, it's kind of a pain doing this, actually. It's not great.
Not great for our business.
So I don't know what the asset class means, whereas, look, equity ownership in a stock. I know that I am entitled to a share of profits that, if they're distributed, I'm entitled to that. Debt ownership. Great, I'm lending you money and you're going to pay me X dollars over X period of time.
Commodity ownership.
I own that commodity and I can do something with it.
Even if it has very few practical, like gold is oftentimes like complained about because it has very little in the way of like manufacturing use cases. But you can say that people hold gold to a certain extent and use it for jewelry and other things aside from your traditional mechanical and engineering type uses. I'm with you. It's a very difficult thing to wrap your head around in terms of what is the logic of me owning this or buying it?
The value to me of cryptocurrency comes in its decentralized and distributed nature. But if you're now moving away from that to something where it's just held in a brokerage account or an IRA or a retirement account through an ETF, well, it's not really what you're doing. You don't buy Bitcoin in a retirement account because you want to utilize a distributed network. Because you're not. You're going through your brokerage to do so. It's literally the very opposite of a distributed network. So Wall Street's going to have to figure out how to sell this to people, but they're going to try to sell this to people. And the thing that's actually really interesting is if you look at what's going on with all these companies keep amending their filings for these Bitcoin ETFs, and they haven't even been released yet, right? Like none of them have even been released. The fees on them are already converging to zero.
Yeah.
So I don't even know how the companies are going to really make money on. Like they're going to make less than an S&P 500 ETF in a lot of cases.
Because the range I saw was what 0.2 was the lowest.
But a lot of those have also fee rebates.
Yeah.
That if if you do it at the institutional level, it goes to zero. And I saw the highest was like 1.5%, which I'm like, okay, what
is happening?
I'm paying 1.5%. What do you have? Like, is it a real vault? Like, what are you doing here? I don't really know where this goes as far as how wide the acceptance is, because here's what I do know. From working in the financial services industry it'll be 15 years this November. When markets go down 10%, the average investor panics. Bitcoin goes down 10% on a pretty regular basis. So I don't really know how big the actual market is for this, because I don't think the average investor actually likes this kind of volatility. Yes, look, sure they love it when it goes up, but I'm not sure that the average person is really cut out to handle this, quite honestly.
Yeah, it's been pretty severe.
And I say this as someone who, my personal preference is yes, volatility, bring it on, but that's me. I'm an odd duck. I see an awful lot of investors, my account's down 10%, I'm getting pretty nervous. Well, that could be a 5-minute period for Bitcoin. We've seen this.
Didn't it move 4? I think it's moved 4% already today. Maybe more.
Yeah, the other thing on this that I'm curious about, and just because I don't know how the SEC is going to approach this, and I'm very interested to see what the approach is. This is specifically just for Bitcoin.
Right.
Not for any other cryptocurrencies.
And the applications, you can be sure, are piling in for all the rest of them.
Well, what happens when you get freaking, the Dogecoin and Shiba Inu coin and all this? It's...
Are you able to draw the line anywhere?
What I can tell you is that the average retail investor who's not plugged into cryptocurrency and tech and all of that stuff at the level that current crypto people are, just be really, really careful. I beg you,
This is one of those moments. You know those booklets that they send you on the prospectus of what you are buying? You got to kind of read this one. I know they're long. I know they're drawn out.
Yeah.
But there's a whole bunch of risks that you are not used to when you talk about something like this.
The other thing that you got to remember on this, so a lot of these ETFs, basically, they're not actually holding the Bitcoin themselves. They're going through custodians and listing custodians as, who's actually holding it.
One of the key risks they name in their funds.
There's a huge counterparty risk.
Yeah.
If that
things could just disappear.
What Coinbase has said as much that, hey, if we go out of business, this stuff might not be yours anymore. I think 4 of the top 5 cheapest ones that are being listed are using Coinbase as their custodian.
Right.
I'm just saying, like, you've got to be really careful with this. I'm not saying, like, do or don't do it, because individual investors, especially on something this crazy, like, you got to make the decision for yourself. And I say crazy, not that, like, it's stupid or not. I have no idea if crypto is still ever actually going to turn into anything. But it is turning into an ETF now, and that means it's going to be easily accessible to everyone. I don't know if it's good or bad, but you just have to be careful, is what I am saying.